Hello, I'm David Chaston with 98.9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock with news. New debt seems to be the answer to the problem of rising debt deficits. But first, in the US, the pace of new home sales fell in June from May, its weakest in 8 months, the latest evidence that their housing market is cooling. Purchases of newly built single-family homes, admittedly a small portion of all American house sales, rose just 2.4% above June a year ago. Their median new home price is now $442,800, which surprisingly is 4.2% lower than a year ago. Yesterday, we reported that the American administration is proposing higher farm subsidies to counter the impact of new tariffs. That has not gone down well. Farmers seem to want trade, not aid. At the same time, the White House has released details of a faster rise in their federal budget deficit, signalling that the $1 trillion annual deficits will arise sooner than they had expected. The 9 months of this fiscal year has already booked a $670 billion deficit and will get worse from here, principally because corporate tax receipts are falling faster than expected. The share of taxes paid by companies following their tax cut is now near its lowest in 75 years. Confidence in the US dollar and US Treasury debt must come under threat at some point unless this trajectory is turned around. And the EU and US are getting ready for trade talks, but the EU is apparently not bringing salve concessions for Trump, who has instructed that 25% tariffs be prepared in case the EU doesn't roll over. And the EU is preparing retaliation if that happens. On both sides, all the real work seems to be going on, assuming the talks fail. In China, they seem to have fallen in love with securitized home loans. Residential mortgage-backed security issuance was up $30 billion in the first half of 2018, 5 times as much as the equivalent first half of 2017. Suddenly, RMBS derivatives are 2/3 of all such residential securitizations, and the expectations will grow from here. We may have seen this movie before. In Australia, inflation for the 12 months to June rose to 2.1%. Markets had expected 2.2%, but the result was still higher than the 1.9% in the year to March. Markets, however, don't see this result pushing the RBA to raise rates again soon. US Treasury 10-year yield has settled back in New York from this time yesterday and now at 2.94%. That's down 1 basis point at the market close. The 2-10 curve has pulled back further and is now at 28 basis points. The Chinese 10-year is at 3.57, that's up 1 basis point, while the New Zealand equivalent is now at 2.82, that's down 3 basis points. Gold is up $6 today at $1,232 an ounce in New York. And US oil prices are firmer again today, and at just over $69 a barrel. The Brent benchmark is now just over $74 a barrel. Inventories of US crude fell yet again last week to a level that is its lowest in 3 years. And the Kiwi dollar is firmer at 68.2 US cents. On the cross rates, we're also a little firmer at 91.8 Aussie cents and 58.3 Euro cents. That leaves the TWI at 71.5, which is a 1-week high. I'm David Chaston. That was 98.9, brought to you by interest.co.nz.